Crypto Caesar Capital. Hope you're well. It's the 25th of March, 2024. And in this video, I want to talk about what indicators are going to help you survive this bull market. Because at the end of the day, you want to come out of this alive, right? You want to come out of this in pocket. You want to come out of this with more money than you started with, okay? And, anyone who tells you I will be able to tell you when the top is exactly is just talking absolute nonsense, okay? Nobody knows when the exact top is in, okay? So if anyone's telling you that, they're just talking absolute nonsense. But what you can do is you can kind of work out when the market is overheated, okay? And when the market becomes overheated, so we are essentially well into what some might call the mania phase, that is the time to start kind of looking at various different indicators that you might have in your toolbox to consider whether you should start acting defensively. And when I use the word defensively or acting defensively, what I mean is things like taking some chips off the table, or taking some chips off the table and setting stop losses, or simply taking profit across the board. Now, everyone has a different strategy for taking profit, and we're not going to go into great detail around that today. But what I'm going to do is I'm going to tell you some of the indicators that I might be looking at in my toolbox that might help me decide whether I think that this market is overheated, and when it gets to that point, whether I should be acting defensively, so setting stop losses, taking some chips off the table, and acting defensively. Okay, so these are some of the indicators that I have in my toolbox, and I'm going to let you know what they are for free. And of course, if you want to learn more about these indicators, then you can join our VIP group. And you can learn more about these indicators, etc. And hopefully they might be able to help you survive this bull market, because it's easy surviving a bear market, right? Because you just sit and you just wait and you take the pain and you add to your position as the price comes down. But in a bull market, it's different, right? Because obviously your position is increasing, sometimes on an hourly, daily basis, and you're making money. So the most important thing for you as an investor or trader is to protect those profits that you have made. Okay, so I'm going to try and help you today work through some of the indicators that I will be looking at closely as this bull market unfolds. Now, the first thing I want to say to you is this: for me, I'm more about timing than price. Okay, so I don't look to specific prices, but if those prices fit my timing, then that's good confluence for me. But the most important factor, I think, in markets, in bull markets and bear markets, is the timing. Okay, so it's getting it you get your timing right, okay, and you should come out alive and you should come out in pocket. You get your timing wrong, you're going to lose, you're going to die. Okay, your money's going to die. So let's look at the first one. The first one is a really simple indicator. It's called the Pi Cycle indicator, and you can find this on TradingView. Simply put in Pi Cycle, and you will get the Pi Cycle indicator. Okay, it's really straightforward to use. I personally use this one, no credits left. Pi Cycle indicator gives you the highs and the lows. And as you can see, this is Bitcoin now in a weekly time frame, going all the way back to 2011, all the way back here. And you can see how the Pi Cycle works. Essentially, the Pi Cycle uses moving averages. If you click over the moving averages, it will tell you which moving averages it uses, etc. Anyway, let's not go into the detail of how the indicator works, but essentially, this indicator has been pretty accurate along the way. Right at the beginning of the cycle, it called the two cycle tops, and then it called the bottom. It called the cycle high in 2017 perfectly, called the low perfectly in December 2018. It called the high a little bit prematurely in 2021. But to be honest, if you had sold or taken profit of your position at that point, you would have been taking profit around about 60 to 64K. So you would have been a very happy person anyway. Then it called the Pi cycle low a little bit early in June 22 or July 22. But to be honest, again, if you'd listened or taken heed of the Pi cycle indicator low at that point, you probably would have taken position around the 18, 19K mark. So again, you would have been happy with the alert or indication it gave you. So this is a very simple indicator that someone who isn't really familiar with trading, isn't familiar with markets, can just literally keep a track on. Once markets get heated out, it's worth having it on a daily time frame to see whether you get the indication, because at the end of the day, when you get that indication, you don't get much time to make a decision. For example, I think here you probably got about 4 or 5 days to make the decision. Here, probably the same, 2 or 3, 4 or 5 days. So something to keep an eye on, but very, very simple indicator to use. Essentially, when the price gets over the top moving average, which is the blue moving average, it goes on this parabolic phase, and it doesn't really remain above that blue trend moving average for very long. For example, here, once it broke above it and got to the high, it was 140 days, remained above it. Here, once you got above it, it was again 140 days. So it doesn't really give you a huge amount of time, just under six months of mania. And that's another thing you want to take into account. You know, once you get above this blue moving average and you've been trending above it for 100 plus days, then, you know, you might think that market is getting a bit overheated. But this is the first one, Pi cycle, high-low indicator, really nice, simple indicator for people who don't really know what they are doing. So that's the first one. The second metric, I would say, that you should certainly be looking at very closely is Bitcoin dominance, okay? Because Bitcoin dominance has a huge impact, really, on what's going on in the market. Now, I've done loads of videos on Bitcoin dominance, so I'm not going to go into great detail around it. So if you want to look at one of those videos, I think I did a video a month or so ago. I've done a few videos before that as well. I've done lots of videos on Bitcoin dominance, but probably the best one to look at, I would imagine, is the latest one, which is a few months ago. But anyway, the point is this. When looking at Bitcoin dominance, it's quite clear that the altcoin rallies do not start until Bitcoin dominance has peaked out. And generally speaking, in the past, Bitcoin dominance has been pretty high. Okay, so this was the first big altcoin season we had at the beginning of it back in 2017. Bitcoin dominance was at 97%. When the altcoins started to rally and Bitcoin was continuing to move to the upside, Bitcoin dominance fell off a cliff. Okay, and then when we got to the euphoric top in 2018, Bitcoin dominance was at about 36 or 35.63%. In fact, it was a little bit low. It's 35.28%. So it was super low. Then we went into the bear market. Bitcoin dominance continued its upward trajectory. And then it peaked out in December 2020, when Bitcoin again was, of course, tapping on the door of its previous all-time high of around 20K. And once it breached through that around about sort of mid-December, towards the end of December, it then rallied to the upside by about 14%, from about here up to here, 16%. And then once Bitcoin was trading around about 30K mark, 40K mark, Bitcoin dominance then started to fall off a cliff. Okay, and that's when the alt started to rally hard. And arguably the top for most altcoins was around about the sort of end of April, beginning of May point, when Bitcoin dominance had fallen off a cliff and it was trading around about 39%. Again, that was when there was a big Bitcoin correction. And here, of course, there was a big Bitcoin correction. So once you're getting into this zone here, I'm calling it the death zone between sort of 40% down to 35%. That is a very good indication that there might be a big correction of Bitcoin in the making, ready to start. So I'm not really sure what on earth's going on with Bitcoin dominance at the moment. My view is that I thought we were going to get to 58%. It may well be that we do get to 58% once Bitcoin rallies past 73K, its current all-time high, and up to the sort of maybe 80, 90, 100K mark. It might get itself up to the 58%, but then it's going to start moving down. And that's the point when altcoins are going to start going absolutely crazy, and altcoins are going to, most altcoins will probably outperform Bitcoin. Some of the very good altcoins are going to really outperform Bitcoin. And that is when Bitcoin dominance starts falling off a cliff. Now, whether it gets back down here again, I don't know. But at the end of the day, once you see Bitcoin dominance falling off a cliff and coming close to the zone of, 40%, maybe kind of down here, the sort of like 46% zone, depending on, of course, where Bitcoin is at that point. But, once you start falling through here and getting close to the death zone, that might be a good indicator that, a top of the market could be in. Certainly, if we're down in this zone here in the death zone, that to me would be a really good indication that Bitcoin has topped out or is about to top out. And it would be a good time for you to start acting defensively. Right, the next one is a pretty straightforward indicator, and I'd be very cautious of this particular indicator, and it's the RSI. Now, the RSI, of course, is the relative strength index, and if you are going to use this tool for trying to gauge whether the market is really overheated, then you've really got to look at the monthly time frame. Okay, now there's no point looking at weekly timeframes and daily timeframes really when you're trying to work out whether something's really topped out, because unless you know exactly what you're doing and you're very experienced. But if you are just a very sort of learner or sort of beginner type trader or intermediate trader, you're better off just looking at the monthly RSI, because of course the RSI can remain overbought or oversold longer than a trader can remain solvent. So for God's sake, don't use this on its own. But what's quite interesting about the monthly RSI is back in the peaks of 2013, it got up to 96.68%. It almost got there back in 2017. Getting 96%, and then the last rally or the last cycle, it peaked out at 91. I think it was about 92, about 91.5, so about 92%. Now, obviously, it's clear that there is a slight decline in the RSI, on the monthly RSI over the cycles. But I think what you've got to remember in this cycle is we've got ETFs, and we've got huge institutional flows of capital coming into the market. So this cycle may well be a bit stronger than the last cycle, but maybe similar strength to the cycle of 2017. But anyway, either way, taking the sort of 96 and a half, 96, and then the 92 RSI, I would personally start getting a little bit defensive when Bitcoin gets over 90. Once it starts once it's in the range of 90 on the RSI, then that might be sort of an indication that things are getting a little bit overheated. But of course, you can't really just use one indicator. You've got to look at all of these and take a sort of a holistic approach to looking at the market. For example, you've looked at your Bitcoin dominance. Bitcoin dominance is really quite low. It's in the sort of, I don't know, in the death zone, the 39-40% area. And you're looking at the RSI, and it's in the 90 plus area. Plus you've got a pi cycle high indicator flashing. then that might be a very, very good time, to be quite frank, to start taking some chips off the table and making sure that you're taking some profit away from this crazy casino that we are trading. Okay, so those are the indicators that you can use on TradingView. Very basic. There are lots more, but I haven't got time to go through all of them. But those are some very basic ones for people who aren't really, pro traders or even intermediate, but people who just sort of understand how to use TradingView. Those three metrics are, or indicators, or at least the pi cycle indicator is a good one. Bitcoin dominance, the chart is a good one. Map it out yourself. And the monthly RSI is a good indicator as well. So let's look at some on-chain stuff. Okay, so the first on-chain metric, this is on Glassnode, is what we call the net unrealized profit and loss of Bitcoin, which is overlaid with the fear and greed index. This is actually a very good metric because the overlaying of the fear and greed index helps you understand when markets are overbought or oversold or overheated or very cooled off. So it cooled the two tops back in 2013, and of course once it gets into the euphoria stage, that is a very good sort of indication that, okay, this market is extremely overheated. There's going to be probably a pullback very soon. Maybe I should take some chips off the table. Equally, it's very good at gauging bottoms, and you'll see here it's in the red capitulation zone. Gauged the bottom in 2015 perfectly. Similarly, in 2017, the top went up into the blue euphoric stage, and again down to the capitulation stage, gauging the bottom perfectly in 2018, the December 2018 bottom. Now the top in the last, or the first top, if we could call it that, in April, May 2021, it was knocking on the door. It was really knocking on the door here of going basically into the euphoria stage, but it didn't quite get there. But it was telling you this market is overheated, okay, because it was right up on the line. It was right up on there. And that was a clear indication that we were approaching a very, very overheated market. Again, gauge the bottom nicely, and here we are pretty much exactly where we should be, because if you actually look at where we are in this stage, we are essentially where Bitcoin was all the way back in December 13th December 2020, when Bitcoin was at 19K, tapping on the door of the previous all-time high. And where are we now? We are trading at 69K, tapping on the door of the all-time high. So we've got quite a way to go here, but this is definitely a metric worth looking at. The next one is the MVRV Z-score, which evaluates whether Bitcoin is overvalued or undervalued relative to its fair value. Now, you can do some more research into this. I haven't got time to explain everything in this video because we'd be here for a long time. But essentially, again, this metric, this on-chain metric, gives a really, really good indication of when the market's overheated or equally it's underheated. So we can see here the tops came into this red zone. Once we get into this kind of red zone here, that is a really good indication that we are now quite overvalued, and it might be worth being defensive in your position. Again, right down here, we are a long way off until we get into this kind of higher area. Once we get into the sort of like, the 6, kind of 7 area, maybe up into the red, then that would be a good indication that the market is pretty overheated. Next one is the Mayer multiple. There we are. So the Mayer multiple is an oscillator calculated as the ratio between price and the 200-day moving average. Okay, so again, it tells you when markets are overheated or they are very cool, and it's very ready for you to take position. So you can see the moving averages tracking, and you can see here at the bottom as well whether we're overvalued or undervalued. Again, we've got quite a way to get to the overvalued stage rather, coming above this red line. But essentially, if Bitcoin were to go on an absolute parabolic move to the upside today and not stop, it would need to get to $100,302 before we'd even be touching the top of the Mayer multiple. But once you start touching the top of it, and certainly breaking out through it and getting there, again, that's you know, an indication that things are starting to get pretty hot in the market, and taking into account all of your other indicators and throwing this one into the mix. This one is a pretty good one to take into account. Okay, so those are all the on-chain metrics. There are lots more, and we could go into a lot more detail and we could have a lot more analysis on them, but we haven't got time for that. So we're just going to jump into the last one. And this is a macro indicator. And this is an extremely good metric, I think, that's been put together by a chap called Michael Howell, who I've mentioned in previous videos, who is an extremely experienced guy within markets. And if you simply just put in the global liquidity index, FT, you'll come up with this article, and you can follow him, Cross Border Capital, on Twitter. But essentially, Michael has put this global liquidity index together, which is really actually quite a good indicator, because this doesn't just take into account M2 liquidity, so all the cash in the central banks, but it takes into account M2 global money markets. It takes into account debt and other metrics, which he's put together. And quite interestingly enough, if you look at this chart, you will see that when global liquidity is like a tide, it ebbs and flows. And when the tide comes in, global liquidity rises. And then when there's a contraction of global liquidity, it comes down. And what happens to the markets? The markets come down with global liquidity coming down, and then they rise with global liquidity increasing. And if you actually look at this and look at the timing of how this has worked, it's worked perfectly with Bitcoin, for example, because it was telling you that there was you know, a low of global liquidity back in around November, December 2022, which was pretty much when the bottom of Bitcoin was in. And again, it gauged the top in 2021. Right at the top here, that's when Bitcoin was trading at its all-time high. And again, interestingly enough, the bottom in 2018, it gauged perfectly. And you can have a look at this yourself, but essentially, as global liquidity ebbs and flows, or the tide goes in and out, markets contract with it. And what's quite clear at the moment is that global liquidity is on the rise. And interestingly enough, if we were to peak out on a left translated cycle basis, and you want to learn more about that, look at my other videos. But if we were to peak out sooner, so at the end of this year, that would potentially fit with this metric. But it would also fit with a cycle peak under the 4-year cycle as well, coming in late 2025. But, you know, something to keep an eye on, isn't it, really? Because if you're looking at all of your other indicators, and, you know, the global liquidity index is pretty high. It's up here. You know, you've got a pi cycle high indicator flashing, a pi cycle high. You've got the RSI over 90. You've got the MVRV score really high. You've got net unrealized profit and loss in the euphoria stage or close to it. You know, Bitcoin dominance is around about within the death zone, the sort of 39% area, or below 40%. Then, you know, these are all sort of pointers to tell you, listen, it's been a good run. It's been a great run. You've made a lot of money. Now is the time to start taking profit. Come out of this market alive. Come out with some profit, because you know what? Most people don't come out with much profit. And most people who join my group have suffered a previous cycle, and they made so many mistakes, but they come into my group and then they learn about these things, and then they quickly start making profit, and then they start becoming they manage their risk properly. You know, they become real investors and real traders, and they start making money. Okay, and this is what this game is about. So those are all the indicators in my back pocket at the moment. I've got lots more, but these are the very basic ones that you can look at as a sort of a new trader or investor, or someone who's maybe intermediate or beginner. And you can use these very, very simply and easily. Okay. So I hope you've enjoyed this video. I'll do another sort of video on this in the future, but all of these indicators, in my view, are pretty good, pretty straightforward, and will hopefully help you come out of this casino alive. Thank you very much for listening. If you want to join the group, there's a link in the description. You can email us via the website, or you can reach out to me on Twitter. Thank you very much for listening. Take care. Bye-bye.